9 countries just launched a pilot program that could fundamentally change how global trade works, and the timing couldn't be more critical for understanding what's really happening to the US dollar's dominance in international finance. On October 31st, 2025, something unprecedented happened. The International Research Institute for Advanced Systems launched what they're calling the Unit, a digital trade settlement instrument backed by 40% physical gold and 60% BRICS national currencies. Before you get swept up in headlines claiming this spells the dollar's death, let's examine what's actually happening here, because the reality is both more nuanced and more interesting than the dramatic proclamations suggest. The unit isn't a currency you can hold in your wallet or spend at a store. It's not even a cryptocurrency in the traditional sense. What BRICS created is a settlement mechanism. Think of it as a sophisticated digital accounting system that allows member countries to conduct cross-border trade without routing everything through the dollar-dominated SWIFT system. The pilot program issued exactly 100 units, each initially pegged to 1 gram of gold. That's it. 100 units for a block that represents 46% of the world's population and 37% of global GDP. But here's where it gets fascinating. Each unit is backed by a carefully constructed basket, 40% physical gold, and 60% equally weighted BRICS currencies: the Brazilian real, Chinese yuan, Indian rupee, Russian ruble, and South African rand. The value fluctuates daily based on these underlying assets. By December 4th, market movements had already adjusted the unit's value to 0.9823 grams of gold, showing the system responds to real market forces. The technical infrastructure is genuinely innovative. The entire system runs on a permissioned Cardano blockchain, creating secure, traceable, and tamper-proof transactions. This isn't some hastily thrown-together experiment. IRIUS, part of the Russian Academy of Sciences, developed this framework for months, with the formal announcement coming on November 10th about the blockchain implementation, followed by the prototype launch on December 8th. Now let's address the elephant in the room. Is this really the beginning of the end for dollar dominance? The numbers tell a more complex story. As of the second quarter of 2025, the US dollar still accounts for 56.32% of global foreign exchange reserves. That's down slightly from 57.79% in the first quarter, but it's essentially unchanged from the 58% it held in 2022. Despite all the sanctions, all the geopolitical tensions, all the talk of weaponization, the dollar has remained remarkably stable in its reserve currency role. More telling is the dollar's dominance in actual transactions. It accounts for 88% of foreign exchange trading and 54% of export invoicing worldwide. These aren't just numbers on central bank balance sheets. This is the real economy, real trade, real commerce, flowing through dollar-denominated channels every single day. But BRICS nations aren't operating in a vacuum. Russia and China have been aggressively pursuing dollar alternatives since Western sanctions intensified. China's yuan has been making steady inroads in bilateral trade agreements. Russia developed alternative payment systems out of necessity. Iran got cut off from SWIFT entirely. These aren't ideological choices. They're survival mechanisms. The interesting dynamic here is that BRICS isn't actually unified on this issue. India's External Affairs Minister S. Jaishankar made this crystal clear in March 2025 when he stated, "I don't think there's any policy on our part to replace the dollar. The dollar as the reserve currency is the source of global economic stability. And right now what we want in the world is more economic stability, not less. I don't think there's a unified BRICS position on this." That's not diplomatic speak. That's a fundamental disagreement about strategy. India and Brazil have been consistently cautious about any moves that might destabilize the existing financial system. They're not interested in revolution. They want evolution. China and Russia, facing direct financial pressure from the West, are much more motivated to create alternatives. This internal tension creates a fascinating paradox. The countries with the strongest motivation to abandon the dollar, Russia, Iran, and to some extent China, are also the ones with the most limited access to global financial markets. Meanwhile, the countries with the most to lose from financial instability, India and Brazil, are the ones with the strongest voices within BRICS. Enter Donald Trump's response, which has been characteristically blunt. In November 2024, he declared, "The idea that the BRICS countries are trying to move away from the dollar while we stand by and watch is over. We are going to require a commitment from these seemingly hostile countries that they will neither create a new BRICS currency nor back any other currency to replace the mighty US dollar, or they will face 100% tariffs." Brazilian President Lula's response was equally direct. "We don't want an emperor, we are sovereign countries. It's not right for a president of a country the size of the United States to threaten the world online." This exchange perfectly captures the underlying tension. Is this about economic efficiency or geopolitical power? The reality is probably both. When Vladimir Putin appeared at the 2024 BRICS summit, holding a prototype BRICS banknote, it wasn't just theater. It was a signal that alternatives are being seriously developed. But signals and operational systems are very different things. Google Trends data shows public interest in dollar debasement reached unprecedented levels in the last quarter of 2025. People are paying attention. They're asking questions about monetary stability that weren't being asked a decade ago. But public concern and actual financial system transformation operate on completely different timelines. Here's what's actually happening with the unit right now. It's a functioning prototype, but calling it operational in any meaningful sense overstates its current role. No actual trade settlements have occurred. No central banks have adopted it. The 100 units issued represent a proof of concept, not a functioning alternative to the SWIFT system that processes millions of transactions daily. The timeline for any significant expansion stretches across years, not months. Russian Deputy Foreign Minister Sergei Ryabkov clarified that the broader BRICS pay system, which is separate from the unit, targets operational status by 2030. The period from 2026 to 2027 is expected to focus on infrastructure development and limited expansion. But here's where things get genuinely interesting for the future. India takes over the BRICS presidency in 2026, and their approach is telling. Rather than pushing for dramatic dollar alternatives, they're focusing on what they call building resilience and innovation for cooperation and sustainability. The Reserve Bank of India has quietly proposed linking the central bank digital currencies of BRICS countries, a much more practical approach than creating an entirely new monetary system. This CBDC linking proposal could actually be more significant than the unit itself. Central bank digital currencies are already being developed by most major economies. Creating interoperability between them would allow direct settlement without creating new currencies or requiring gold backing. It's evolutionary rather than revolutionary, which makes it much more likely to actually happen. The technical challenges of the unit shouldn't be underestimated either. Maintaining a stable value across 5 different national currencies plus gold requires constant rebalancing. The blockchain infrastructure needs to handle real-world transaction volumes. Regulatory frameworks need to be developed across multiple jurisdictions with very different legal systems. Even more fundamentally, any successful alternative to the dollar needs to solve the same problems that made the dollar dominant in the first place. It needs to be stable, liquid, widely accepted, and backed by deep capital markets. The United States offers all of this through the world's largest economy, most developed financial markets, and most stable political system. Replicating that through a consortium of countries with very different economic systems and political priorities is extraordinarily difficult. But dismissing these efforts entirely would be a mistake. The dollar's dominance isn't guaranteed by natural law. It's maintained through network effects, institutional momentum, and the practical advantages of using the world's most liquid currency for international trade. If enough countries develop viable alternatives, those network effects could start to weaken. The most likely scenario isn't a dramatic collapse of dollar dominance, but a gradual diversification of the international monetary system. We might see regional currencies for regional trade, specialized settlement mechanisms for specific commodities, and multiple reserve currencies rather than one dominant system. The unit represents one possible path toward that more diversified future. Its current scale is tiny, its challenges are substantial, and its member countries aren't fully aligned on objectives. But the very fact that it exists, that it functions technically, and that it's backed by countries representing over a third of global GDP makes it worth watching. What happens next depends largely on factors beyond BRICS control. If US fiscal policy continues to expand dollar supply, if trade tensions escalate further, if more countries face financial sanctions, the incentives to develop alternatives will only grow stronger. Conversely, if the global economy stabilizes in trade, relationships normalize, the urgency behind these initiatives could diminish. The unit itself will likely remain a small-scale experiment for the foreseeable future, but the broader trend it represents, the development of alternative financial infrastructure by major economies, is probably irreversible. Whether that ultimately strengthens or weakens the international financial system depends on how these alternatives are implemented and how existing powers respond to them. We're not witnessing the end of dollar dominance, but we are seeing the beginning of serious alternatives being built. The question isn't whether these will replace the dollar entirely, but whether they'll create a more multipolar financial system where the dollar remains important but not indispensable. That's a very different future than the one we've known for the past 80 years, and the unit is one small but significant step toward making it reality.